Better money choices. Choose a bank that takes your money seriously. Business Watch is brought to you by Nedbank.
$1,400, you're watching Nedbank Business Watch, and you're watching it on Eswatini TV, Swati. Welcome to the program. Hope that you're enjoying your day so far and that you'll enjoy the rest of your afternoon. We certainly promise you a very informative program this afternoon, myself and my co-host, Lungalele Makakula.
Fusi, how are you this afternoon?
Doing all right. How are you?
I'm great. An afternoon to our viewers as well. Thank you for tuning in. We are live on our YouTube page, Eswatini TV, as well as DSTV channel 286. It's going to be a great program. Stay tuned. Nedbank Eswatini rolled out 2 savvy mobile payment solutions for MSMEs. Small businesses can now accept card payments anytime, anywhere with their device Pocket Pause or Tap on Phone, which is the first of its kind in Eswatini. The Pocket Pause is a cheap and PIN and contactless mobile point of a sale solution that turns your smartphone or tablet into a POS device, which means customers can now pay you conveniently, securely, and instantly. Today, we take you back to a conversation I had with Mfanelo Dlamini from Nedbank, who explained how this device actually works.
And of course, also today we want to examine a question that sits at the heart of public procurement. That is government truly getting value for money? The market price reference catalogue was introduced to help public institutions procure goods and services at fair and competitive prices, improving transparency as well as safeguarding taxpayer funds. But while the catalogue seeks to keep costs under control, suppliers continue to raise concerns about delayed payments. Now, many businesses supplying government say they are often forced to wait beyond the prescribed payment period, leaving them with little choice but to seek financing to keep operations running. Now, the concern is that these additional costs may ultimately find their way back into the prices government pays. So, are payment delays quietly increasing the cost of doing business with government? And what does this mean for the broader objective of value for money in public procurement? We'll be unpacking these issues and more in today's program. Stay with us.
Digital helps you make cross-border payments. Human gives you global specialists. Digital allows you to apply for a loan anytime, anywhere. Human connects you to credit experts. Digital puts you in control of your money, while Human connects you to wealth advisors. Digital allows you to freeze, unfreeze, cancel, and reorder your card. Human gives you that personal touch. Digital when you want it. Human when you need it. Get the complete private banking experience with Nedbank Private Clients.
Right, welcome back. You're still watching Nedbank Business Watch now for our business news segment.
In our first story, discussions on the development of the Eswatini financial inclusion legislation have begun to strengthen the country's efforts to promote inclusive economic participation. The proposed legislation comes as Eswatini seeks to build on gains made under the National Financial Inclusion Strategy, which has positioned the country among leading performers in the SADC region for access to formal financial services.
Eswatini is moving to strengthen its financial inclusion framework through the development of a dedicated financial inclusion legislation. This is progress that could help transform access to financial services into meaningful economic opportunities. The legislative process comes as the Center for Financial Inclusion reviews the implementation of the National Financial Inclusion Strategy of 2023 to 2028, which seeks to expand access to affordable and appropriate financial products. Despite the high levels of financial inclusion, access to productive credit remains low, particularly for small businesses and farmers. The strategy indicates that only 12% of adults access formal credit, while more than 80% of MSME owners have no access to credit facilities. The Center for Financial Inclusion CEO Sizakele Dlamini says the proposed legislation is expected to provide a stronger legal foundation for coordination in the financial inclusion ecosystem.
Just to highlight a few issues that we believe are the foundation of this legislation, or where we see the Center for Financial Inclusion in the future. Lokuthi ibheke CFI, financial inclusion agenda, what does it involve and all that. I will first of all state that our target groups as the Financial Inclusion Center are mainly the underserved populations. Collectively now, as the partners, we are all interested in the improvement or the betterment of lives of the citizens. And that includes access to finance, it includes financial products that are affordable.
The draft legislation is also expected to address long-standing challenges identified in the strategy, including limited access to credit, gaps in consumer protection, financial literacy concerns, and the need for innovation in digital financial services. The Ministry of Finance highlights the key components of the legislation to meet the financial inclusion agenda.
The Financial Inclusion Bill, in a nutshell, highlights the following: the establishment of a Center for Financial Inclusion as a legal entity, the establishment of the Financial Inclusion Fund that will provide guarantees and line of credit for all target groups, being the underserved, the youth, women, disabled, forcibly displaced persons, amongst others, and also lobby for the development of tailor-made financial inclusion products. Also, the establishment of the Financial Education or Literacy Academy, which will look into capacitating our target groups and promoting financial education in the country. It will also establish the Financial Inclusion Forum and how the center will engage with all relevant stakeholders. The creation of a financial inclusion data portal to understand the reality and the needs of our target groups and make informed policies and products based on live data. It is important to have this legislation which will guide the effective implementation of the financial inclusion agenda in the country.
The engagement also reviewed progress made through the Financial Inclusion Cluster Development Program, FINCLUD, which includes the existing CFI MSME financing instruments. Under these, 1,297 loans have been disbursed, amounting to 9.5 million emalangeni. Reporting, Nosidas Tole, Vumgosinzinisa, Eswatini.
Ambitions to position Eswatini as a competitive player in Africa's single market could receive a major boost through a new startup acceleration program that is going to link African entrepreneurs to South Korea. The African Continental Free Trade Area Startup Partnership Program 2026, an initiative of the African Continental Free Trade Area Secretariat, as well as the Korea Africa Foundation, is seeking high-potential African startups to participate in business acceleration that is aimed at expanding African innovation into global markets.
As Eswatini implements its national AFCFTA strategy for 2024 to 2028, the opportunity stems as a potential gateway for local entrepreneurs to access foreign markets, investment, and international partnerships. The AFCFTA Startup Partnership Program comes as Eswatini is actively seeking to diversify its exports, support youth entrepreneurship, and increase participation in regional and global value chains. The program will select 30 startups from across the continent operating in priority sectors such as fintech, e-commerce, logistics, agri-tech, manufacturing, digital platforms, and climate technology. The timing of this initiative is significant as 2 years ago, government launched the National AfCFTA Implementation Strategy and Action Plan for 2024 to 2028, designed to help the country leverage Africa's single market to boost trade, attract investment, promote industrialization, and increase participation in regional value chains. The strategy prioritizes export diversification, MSME development, improved access to finance, export readiness, and greater competitiveness of local businesses. Eswatini's AfCFTA strategy also seeks to increase local production and support youth and women-led enterprises to compete beyond the country's borders. Government and development partners have emphasized that the agreement could create new opportunities for MSMEs, encourage value addition, and open doors for non-traditional exports. Interested entrepreneurs can review the program guidelines and submit their applications online before June 14. The program's evaluation process will place emphasis on innovation, global expansion potential, social impact, job creation, and alignment with AfCFTA's priority industries. The AfCFTA is the world's largest free trade area by number of participating countries, covering a market of about 1.3 billion people with a combined GDP of approximately $3.4 trillion. Access to such a market represents a critical opportunity for growth for local startups. Reporting, Nosiles Tole, Vumgosinzinisa, Babane.
The economic impact of the annual M10 Bushfire Festival continues to grow. According to Bushfire Festival 2026 performance report by the Eswatini Tourism Authority, during the 5-day festival period from 27 to 31st May, a total of 50,403 people entered the country, representing an 11.5% increase compared to the same period last year. Of these, 28,392 were international visitors, while 22,011 were Eswatini residing abroad. International arrivals recorded the strongest growth, jumping by 54.5% year-on-year, underlining the festival's growing status as one of Africa's leading cultural and tourism events. South Africa remained the largest source market, contributing 64% of visitors, followed by Mozambique at 16.8% and Zimbabwe at 5.8%. Overseas markets were led by the United States, which accounted for 1.5% of total arrivals, followed by France and the Netherlands at 0.6% each. The increase in visitor numbers also translated into stronger demand for accommodation, with the average room occupancy rate reaching 78.6%, up from 73.7% during the corresponding period in 2025. Hotels recorded their highest occupancy rate at 83%, while game and nature reserves followed closely at 78.9%. Regionally, Manzini posted the strongest performance with an occupancy rate of 82.3%, followed by Eswatini at 80.5% and Babane at 73%, reflecting the widespread economic benefits generated by the festival across key tourism hubs. And that's it for our business news. The program continues after the break.
Stay with us.
Digital helps you make cross-border payments. Human gives you global specialists. Digital allows you to apply for a loan anytime, anywhere. Human connects you to credit experts. Digital puts you in control of your money, while Human connects you to wealth advisors. Digital allows you to freeze, unfreeze, cancel, and reorder your card. Human gives you that personal touch. Digital when you want it. Human when you need it. Get the complete private banking experience with Nedbank Private Clients.
Welcome back to the program. The Market Price Reference Catalogue, known as the MPRC, was introduced to help government secure goods and services at fair market prices, to also promote transparency, as well as to ensure value for money in the use of public funds. Now, despite this tool, suppliers have persistently faced payment delays beyond the prescribed 30 to 60 days, forcing them to take out loans and incur additional financing costs. Now, these would then be based or passed on to government through higher prices. The concern now is about whether payment bottlenecks are driving up the cost of doing business with government. To unpack the MPRC versus value for money, we are joined by Compliance Officer of the Eswatini Public Procurement Regulatory Agency, Lisanda Mlangeni. Thank you so much for making time. Pardon my voice, I'm recovering from flu, but perhaps we want to start on the thorn, which is delayed payments, as well as procurement costs. I read here the MPRC was introduced to help government procure goods and services at fair market prices, as well as ensure value for money, something that is very important. However, suppliers continue to raise concerns, right? Concerns about delayed payments. So what impact do these delays have on procurement costs?
Thank you so much for having me, Sfiso, and good afternoon to the viewers. So I think to put everyone into perspective, I first need to define what the Market Price Reference Catalogue is.
Mm-hmm.
So the Price Catalogue is a market reference tool that is used internationally to support public procurement. So in the country, we have the Market Price Reference Catalogue, which is used for common used items purchased by procuring entities. Basically, it supports procurement officers in assessing whether quoted prices are reasonable and a true reflection of the market conditions, of the prevailing market conditions. So to answer your question, you asked if the implications of delayed payments. So the regulatory framework in its current form does not cover the issue of payments. However, we do understand that businesses get affected by the delayed payments. So I would say that we do encourage, like that. We say that timely payments do support the value for money.
Yeah, and the timely payments are important indeed, because, you know, as we say, that the impact should be very, very significant, particularly on the procurement cost. But not only that, I think the most important thing then becomes the supplier's willingness to participate in public tenders. You know, how has that been?
Yes, it is true that if there's delayed payments, maybe some suppliers may not wish to participate. But however, the Market Price Reference Catalogue, may I just put it out there that there's been this misconception that the Market Price Reference Catalogue is a price-fixing tool. It is not. It's simply a reference. It's a reference guide for procuring entities to help them assess if what's being quoted by suppliers is a true reflection of what's happening on the ground. So it's mainly just to help entities. It's to promote transparency, fair competition, and accountability.
Yeah. Let's talk about the payment period, 30 to 60 days.
Right.
And as expounded on the catalogue, it says government policy requires suppliers to be paid within 30 to 60 days. Yet payment delays remain, of course, you know, a recurring concern. if suppliers are factoring financing costs into their prices because of these delays, what reforms need to improve here?
Sfiso, you're right. There is a need to streamline internal payment approval processes. In some cases, delays may occur because invoices move through multiple stages before payment can be approved. However, we do suggest that Eswatini do look into digital systems which can help improve the invoice tracking, payment monitoring, and overall visibility through payment processes.
Yeah, there's a lot of changes. On this show, we have something called the market analysis, and that usually comes in towards the end. In fact, it is the last segment of the program. And normally it addresses issues of inflation, market prices, and these are things that are always changing, but also input costs as well as financing charges. They can all change rapidly, and they certainly do, right? How often is the catalogue reviewed, and perhaps is that review cycle period frequent enough to keep pace with the actual market conditions?
Okay, that is a very important question. Market conditions today are much more dynamic than they were maybe 2 years ago. So prices can be influenced by inflation, exchange rate movements, fuel prices, supply chain disruptions, and other economic factors. So for that reason, market reference tools such as the market price reference catalog cannot be treated as a static document. So they do need to be reviewed. So this is one of the key reasons why ESPRA is currently undertaking an update of the market price reference catalog. So beyond simply updating prices, the exercise is also looking at improving item classification, standardizing descriptions, expanding coverage into health and ICT. So to just it's a tool that needs to be updated probably biannually.
Yeah, so that does happen. Does that happen biannually, or it's something that you believe as Lisanda should happen biannually?
It's something we've actually engaged as a park to review the catalog and also come up with a methodology that will be feasible in terms of the tool being updated biannually. Yeah. So yes, it is being updated biannually.
Yeah, because of course the procurement system requires to be strengthened every now and then.
Yes.
And certainly when something is going well, sometimes we get in meetings and we agree that something is going well. But also in those meetings we always agree that there's always room for improvement. Perhaps how do you speak to strengthening procurement systems, because you want to look ahead and say what changes would we want to improve in terms of strengthening our procurement system?
Okay, so as I've said that we're currently engaging as a park. So the update basically is being informed by market data, procurement information, and stakeholder engagement to ensure that the catalogue remains credible and relevant. So ESPRA is also exploring opportunities for greater digitalization of the catalogue in the future. So this would help improve accessibility, increase transparency, and also reduce administrative costs.
Yeah. Lisanda, thank you so much for your time. I appreciate having you on the program. You'll go and enjoy the rest of your day. Lisanda Mlangeni, and we are talking the MPRC, am I correct?
Yes.
Indeed. Let's go for a net break.
Digital helps you make cross-border payments. Human gives you global specialists. Digital allows you to apply for a loan anytime, anywhere. Human connects you to credit experts. Digital puts you in control of your money, while human connects you to wealth advisors. Digital allows you to freeze, unfreeze, cancel, and reorder your card. Human gives you that personal touch. Digital when you want it. Human when you need it. Get the complete private banking experience with Nedbank Private Clients.
Welcome back. Our conversation with our economist, Sanele Sbiya, is going to be premised on the South African development, where South African motorists are welcoming a sharp drop in diesel prices of up to 3 rands 25 cents per litre today, and Eswatini has now entered the list of the 10 African countries with the highest diesel prices, with motorists paying an estimated 31 emalangeni 60 cents per litre. And that makes diesel in the Kingdom of Eswatini more expensive than the global average. As global oil prices now show signs of easing, Eswatini is finding itself among Africa's most expensive diesel markets. While South Africa cutting diesel prices while also increasing petrol prices, is there any hope of relief for consumers locally? Sanele Sbiya joins us virtually now on the program. Sanele, a very good afternoon. Thank you so much for joining us. What a very concerning reality, as well as sobering, if you will, learning about, the averages, particularly on diesel prices in South Africa relative to in South Africa. South Africa has cut their diesel price as much as 3 rands 25 cents per litre this month. Eswatini remains among the most expensive diesel markets in Africa. What explains this growing gap?
Thank you, Mr. Ngumalo. Good afternoon to you, and also good afternoon to the viewers. So in terms of this gap that we are seeing, it could be attributable to the fact that Eswatini, number one, imports from South Africa, so we do incur that importation cost. And then secondly, it could be due to our strict environmental measures. Remember that when we had to put this embargo on these imported car vehicles from the Middle East, we had to as well factor in those environmental concerns, and then so you have to factor those in. And then also when you look at the prices overall, the price of diesel, you know that diesel is relatively more heavy to refine compared to petrol. So now right now those things come into effect, and then you're also going to have the tax. So I think because of the environmental impacts mostly, you would find that diesel is priced a bit higher. And then the issue of demand, looking at who actually gets to use diesel. Mostly it's companies and commerce, which are relatively easy to tax and can actually absorb that burden.
And of course, my thing is we source gas from pretty much the same region, do we not?
Yes, we do, but at the same time, remember, we do not have a refining capacity in Eswatini. So ideally, you have to import virtually, the diesel and the petrol in its refined state so that it is ready for use within the domestic economy. So essentially, we do not necessarily import from the Middle East as Eswatini, but we import from South Africa. So it is South Africa that imports from abroad, and then we have to import from the Middle East. So that's why we are going to see that premium, in terms of Eswatini prices. So before, we would find that Eswatini is relatively lower than South Africa because, we don't have that many taxes in terms of our fuel. So it's only just last year where we added the 40%, the 40 cents fuel levy. But if you look at the rates in South Africa, the number of taxes that are there, now that signals that we should actually be a bit lower than South Africa because of that tax impact. So what has happened right now when we came into this volatile war period, what happened was we saw South Africa, just taking out quite a number of those taxes just to cushion the economy. So right now you are still dealing with a South Africa that has taken those taxes off of the fuel or the price per liter so that you cushion the consumer. So that is why now we are actually below South Africa. Seemingly we're going to get above South Africa, is already above South Africa in terms of the price of diesel, which is something we've not seen in history. So it's a first occurrence right now because we've seen those taxes being taken off.
Now, to the most, I suppose, concerning statistic that Eswatini is amongst the top 10 countries with the most expensive diesel prices in the region. What does that tell us about the structure of our, fuel prices, but also, as well as, should policymakers be concerned?
The ideal situation, Mr. Ngumalo, is you would want to remain relatively competitive in the region so that you are able to compete with your regional peers. So yes, we should be concerned about it as policymakers, or they should be concerned about this because it does diminish the country's potential competitiveness in the regional economy. Eswatini is a trading economy, so we do rely heavily on our exporting capability, and if you could somehow get the price of fuel lower to some certain level, then you would be in a position to ensure that we remain competitive. So in terms of the structure, number one, we have a highly regulated fuel environment. So you remember in Eswatini, before the price of petrol that increase is announced, it is announced by the Ministry of Natural Resources and Energy. So what then happens in those negotiations is you kind of need to always month on month adjust in terms of where you're seeing the price of fuel go. And in most cases, when you're doing those month-on-month adjustments, you may find that at some point we overshoot the cost recovery and at some point we undershoot. So practically, I think we are looking at a structural issue within that managing body in terms of making sure that we can get, the right margins for the retailers and also get the right price for the economy to ensure this overall competitiveness. And then also we need to think of moving into the retailing, the refining space as as a country, so that you just import the crude oil in its form, and then when you have it in Eswatini, that's where you are going to refine it, and then overall you're not going to be importing a commodity that is relatively expensive for you to import from abroad.
I think one thing that we have gotten across to a lot of our viewers in terms of it being a lesson around fuel costs, I beg your pardon, around fuel costs particularly, is that fuel, beyond just it being something for transportation or powering transport, but it is quite essential for the economy's survival. It powers logistics, it powers manufacturing, it powers mining, it powers agriculture. What impact does this have on the broader economy when we, consolidate all these things?
So overall, what we expecting, Mr. Ngumalo, with this high inflationary environment that we are going into, is we're going to see, the cost of living just becoming a bit strained. As you know, that we are already dealing with a strained consumer, and we have a producer who has to take into consideration the fact that the consumer is relatively strained in terms of their cost of living capabilities. So number one, we are going to see those inflationary pressures coming through. And the channels in which we are going to see that, Mr. Ngumalo, right now, there is quite a multiple transmission mechanism. The first one being the pump prices, which is going to be a direct link. And then also we are going to start seeing, the price increase in terms of the retails that you're going to buy and the clothing that you're going to buy, because that there is, haulage that is part of that supply chain. And therefore we're expecting to see those very expensive commodities, they're going to become expensive in the near term. And then also there is this salient one of fertilizers. Remember Remember, around 25 to 35% of the global fertilizer inputs actually have to traverse the Strait of Hormuz, and they do come from the Persian Gulf region. So we do expect that to also further trickle into the winter crop and also trickle into the summer crop as we go into planning. So there's going to be a rebound in terms of food inflation in the short to medium term. Well, into 2027, we do expect that rebound. And then also, we are going to see the importation. Remember, Eswatini imports as a net importer. So we are looking at products that we are going to import at a relatively high price because of the fuel costs. And now there's going to be another driver of inflation, or what we are going to call imported inflation. And now remember that for a vessel probably to move from, say, from China to Eswatini, now that's going to take quite a number of days, and that vessel will be traveling with quite expensive fuel and quite expensive insurance, and now that's going to make the commodities that we import as a country to be relatively expensive. So overall, those factors are going to combine, Mr. Nxumalo, to give us a relatively steeper inflation curve in the short to medium term. Remember, the last month we saw a 0.3 percentage points increase in our CPI, and then we should again expect a 0.1 to 0.2, if not 0.3 percentage points gains in this current month as the war continues. So we are really just entering a steep inflation curve, and it is therefore why we advise consumers and the Maswati overall and businesses to actually be quite savvy in terms of their consumption expenditures and their business expenditures, and find ways in which you could minimize costs at all costs. Now that sounds true.
And then, of course, you speak about minimizing costs. I think the general reality is that businesses are already grappling with, rising operating costs. And perhaps this reality that we are speaking of now around fuel, the diesel prices in particular, could it undermine efforts to attract investment and over and above that, as well as grow local industries?
So the main one on that, Mr. Nxumalo, is, businesses are really struggling with margins. That is why in economics we say inflation is a necessary evil, because you need to allow, businesses to have that margin so that they stay profitable. So right now, with a supply side cost increase, then you will find that at the initial stages, what businesses are going to do is, just try to manage costs and cut into their margins a bit. But right now, we are getting to a point where businesses are not going to be so much willing to cut into their margins, purely because, number one, you're looking at a situation where we were expecting this war to be over by last month. It was supposed to take 4 weeks, remember, when it started. And then right now, we're into the third month, and it seems we're going to go into the fourth month as well. So right now, businesses are not going to be that willing to cut into their margins with the hope that things are going to normalize pretty soon. So that is what is going to happen on the local front. And then in terms of attracting investors, what investors want is a relatively stable environment. But because Eswatini imports, and we are very much vulnerable to these external shocks, so yeah, it does become a metric of consideration within an investor's decision-making matrix to say, if I'm going into Eswatini and we are seeing this war right now and it's very fresh. Remember, as humans, we work on heuristic memory. Our short-term memory is very good. So people are just going to look and see that now Eswatini we have that problem. But fortunately, we do have the strategic oil reserves under construction, and it is coming through. So I'm thinking that investors are also weighing that into their decision-making matrix, because it is a factor that is going to also determine our ability to have a predictable supply environment for fuel.
Thank you for your time, Mr. Sbiya. We really appreciate having you on the program. Stanley Sbiya, our economist, chiming in on rising fuel costs, particularly diesel prices, when we look at, the relativity with what is happening in South Africa, and certainly what is pertaining on the ground here at home. When we return from the break, we reflect on an interview Lungelele had with Nedbank Eswatini as they looked at Nedbank's innovation pocket POS.
Welcome back. You're still watching Nedbank Eswatini. Thank you for staying with us. Now, say goodbye to cash-only woes. Nedbank Eswatini has rolled out 2 savvy mobile payment solutions for MSMEs. Small businesses can now accept card payments anytime, anywhere with their newly launched device, Pocket Pause and Tap on Phone. Mfanelo Dlamini from Nedbank Eswatini joins me now to tell us more about this. A very good afternoon. Thank you, Mfanelo, for coming through to the program. Talk about the right banking solutions, the first of its kind in Eswatini. What is Pocket Pause and Tap on Phone?
Thank you for having us, Lulu. And again, we are very excited about this product as Nedbank. Yeah. This is one of the newest innovation that we've brought into the market, which is going to assist our small and medium enterprises. Pocket Pause is just a small gadget that it literally fits in your pocket, which enables payment anywhere you go. Basically, it's a device like this.
It's touch and feel. Portable.
Very portable, very portable. Even fits in one of your ladies' small Nyana wallets, so you can fit it anywhere you want to go.
Yeah.
This device, it's your normal point-of-sale devices, like the big ones that you see in these corporate shops, and but this one is suitable for the small ones, which you literally buy and own as a customer. It enables you to accept any form of payment from any card that is it's either your Visa card, your American Express card, or your MasterCards as well.
Okay. So is it only for SMEs, or an individual like myself can own one?
Individuals like yourself can own one as well if they are doing their informal traders, because like I said, you don't have to necessarily be registered as a trader to be doing something that will give you an extra cash there. We have those entrepreneurs that are still on their hustling side of it, that hasn't got through around registering their businesses. So with this, you can still register yours as long as you have your current account and you fill up a source of funds documentation that will enable us to onboard you on the device as well.
Okay, so is it only accessible to Nedbank clients, or clients from other banks can also get it as well?
It is accessible to Nedbank clients and clients from other banks. However, we would encourage clients to open accounts with us as well. But we do onboard other banks as long as they also have their current account and the source of funds as well.
Right, and finally, I know that it comes with convenience, obviously. So what other benefits come with this portable Pocket Pause?
Well, like you said in your introduction, it's a way of paying without cash.
Yeah.
In most instances, small business people find themselves having to discount their products. Sometimes they have to wait for days and even months from people saying that they don't have cash with them. This device here allows them to get their funds on the spot without even the client having the cash on hand. Since you won't buy a product without cash. It's either it's in the bank or it's in another payment solution, but with this, it will accept the payment there and there.
Okay, so I know that anything that has to do with banks comes with charges. So are there any charges that I can expect, by using this? And also my clients that I have this, transactions with?
All right. Like I said, it's a point-of-sale device, same as those ones that are used in your shops that are already existing there. It comes with the same transactional charges as well, and the commission that is based on the client that is purchasing the device with us. So there's a 2.5 commission from every client that owns this, and the transactional charges on the customer that is buying as well. Same as all the point-of-sale solutions that are out there in the market.
Right, so let's talk about this device and your phone, because it's also called the Pocket Pause or Tap on Phone. How is it linked? Can I use my cell phone?
Part about it, once you download the Pocket Pause device, it comes with another functionality, which is a Tap on Phone. So once you have the Pocket Pause app on your phone, your phone literally becomes the device itself. So it's either you buy the phone or you have the Pocket Pause on you. So it's 2 products per se.
All right.
So on the phones, it basically needs a phone that is an Android 8 and later version, and also comes with NFC enabled. The NFC,
is it only on Android phones or iOS as well?
iOS as well, exactly, and as well as iOS. But for the Tap on Phone on the iOS, you need to have what is this called? iPhone Pay? I think it's iPhone Pay. Well, it should be iPhone Pay enabled, exactly.
Okay, so what happens after buying it? Do I need to register? Does it connect immediately? Take us through the process.
The process starts with the application for the process before you even buy it, because once we deliver it to you, we are already onboarded you on it. All you have to do is download the Pocket Pause app and link it to your Bluetooth device. Then it's ready to go.
Is it only local cards or even international cards can tap on the device and on the phone?
That's another exciting about it. It accepts all local and international payments, your American Express cards, your Visa cards, and MasterCards.
Okay, so what are the requirements, from your SMEs, your individuals, in order to have this portable?
Now, for registered SMEs who are trading, we need company documents, including current trading license and their proof of residence, offices and stuff. So with all of that, we can be able to onboard them for informal traders. Say yourself, you want the gadget, you also have your side hustling. We just need you to fill in a source of funds documentation and also have a current account.
Okay. I suppose you have long queues, there's a lot of demand for this now that, MD officially launched it. How do people apply for it?
Okay, the application process can be done through our social media pages as well. We have LinkedIn, we have Facebook and X, formerly known as Twitter. We also encourage people to interact with us through our help desk line. You can email at helpdesk.co.za or call our help desk line, which is 3278-1999.
Okay, so you only allow applications on your social media pages?
Not entirely. They can also visit our branches, our branch networks, which are literally all over the regions. And also for those SME clients that already have accounts with them, they can contact their bankers immediately for the assistance for that.
All right. Important question: is it a rental device, or I can just it's a once-off payment?
No. This one it's not a rental. It's a once-off payment. You get to own this. It doesn't have any monthly service fees. The only payment that is sharing of commission, which is to 2.5% of turnover.
Okay. How much are you selling it for?
It goes for $4.99. Very, very
Just
cheap.
Only
$4.99. Only $4.99, and you are a working bank.
Okay. All right. Thank you so much, Mzalilo. Well, there you have it. The Pocket Pause and Tap on Phone by Nedbank Eswatini. Do contact them on their social media pages or visit one of their branches for more information. Let's go for an ad break. We'll come back just shortly. Welcome back. You're still tuned into Nedbank Business Watch. This is our final segment of the program. We are now joined by Siviso Nsibande from Nedbank Eswatini for today's market analysis. Very good afternoon. Welcome back, Siviso. It has been a while.
Thank you.
All right. So looking at the world of markets today, what's happening? What's the latest update on the peace agreements between Iran and the USA?
Yeah. So. It's quite interesting because it's been back and forth for quite a while now. I think 4 or 5 times we've been told that a peace agreement is on the way. Some terms are being agreed, and all of a sudden it just falls away. So the latest, which I think was the closest that's been so far, was the US officials and also the Iran officials sort of agreeing that most of the items of the peace agreement were sort of largely what they would be expecting or what would make them sign. But then when it got to the US president, he still wasn't happy with it in such a way that he rejected it and sent it back to say they must still include something. We're not so 100% sure about the details at the moment. It hasn't been divulged, but we are getting the sense that Trump is not entirely happy. I think he just wants to make sure that he really gets a lot out of the peace agreement to make the people of America very happy before he can sign the deal. But I think it's actually causing issues because now it's getting to the point where both parties will lose trust of each other, and who knows, this thing will just escalate up until it gets to the midterm elections in November, where we think that the Republicans will be under pressure to probably even lose the elections because if the consumers or largely the electorate is uncomfortable about the situation, they're feeling the pinch at the petrol pump, and then midterm elections are coming, they probably would vote for the Democrats instead of the Republicans. So I think that's something that Trump must be aware of and trying to watch it, that by the time it gets to November, most of these things should largely have been resolved so that the consumer doesn't feel the pinch, because then he will vote accordingly when it gets to the midterm elections in November.
Okay, so with that, let's take a look at how the Rand or Lilangani is trading against the US this afternoon.
The Lilangani versus the Rand?
Yeah.
So we saw a lot of volatility with the US dollar ZL as well for quite a while. I mean, we've been seeing 1640, 1630. Right now it's actually on the low side, which is the 1627. And that's largely because the expectation that the geopolitical tensions will sort of ease. Maybe the agreement will sort of be signed soon. So I think there's an expectation that in the near term, something should be agreed and there should be a reprieve in terms of the oil price. Because we've also seen the oil price, I think you see it as we proceed. The oil price also reduced compared to what we actually saw previously.
Okay, yeah, take us through the figures today.
Yeah, and then the pound also, you see that it actually gained. Mainly because I think largely all the currencies, they're actually expecting positive news coming out of the tension in the US. But there's a lot of uncertainty still.
Okay.
There's a lot of volatility still. If you're seeing these rates actually right now, you might be you don't be surprised when tomorrow, not even next week, tomorrow, you find that the exchange rate is actually now on the west side. Okay. Because whatever news that's actually coming up, it tends to then filter in through the exchange rates that we're actually seeing currently.
Yeah, speaking of rates, coming closer to home, neighboring countries, South Africa, interest rates. Let's talk about that.
Yeah, so the interest rates is largely expected by most economists. There was a hike of 25 basis points. But the interesting thing is those who were voting, out of the 6 members, 4 voted for the 25 basis cut, and the other 2 voted for a hold, which means, largely, it's a little bit hawkish, but not entirely, because some were still expecting that rates should be kept on hold. So the Reserve Bank governor actually highlighted that the major reason why they decided to hike the interest rate is because the inflation continues to be on the rise. Yes, it's caused by the supply side, not necessarily the demand side, which means it's not because of the consumers, having so much money and going to purchase things. It's actually because things are becoming expensive because of the price and the oil and the oil shocks. And what they're actually saying is it's not just going to be the petrol price. It's now going to start coming into the food inflation as well, because fertilizer is going to go up in price. And most of the transportation, logistics that's moving the food around uses a lot of diesel. And diesel, as you know, has really skyrocketed. So it's becoming expensive. And he says if he doesn't hike the interest rates now, what's going to happen is after the shocks, people are going to get used to the high inflation, and then it becomes normal. So it's better if the central bank acts now by hiking the interest rates to make sure that he wants to bring the interest rates to where it should be, which should be at the bottom of the 3% target.
All right, so moving on to commodities, I see gold is trading at $4,000 today. Take us through these figures.
Yeah, so gold has really come down also, mainly because of the sort of positive news coming out of the US and the Iran negotiations. But like I said, there's volatility. Right now it's down, but we are actually expecting that in the very near term, or even next week or whenever, you start seeing that it goes up, especially if it shows that negative news are coming out of it again. Because gold, as I've said before, is a hedge. If there's uncertainty in markets, then people go for gold. But right now, they are going back into the markets, and the markets are actually booming at present.
All right, so will the hike of interest rates in South Africa have any impact in Eswatini, just before we move on to equities?
Yeah, so the decision in Eswatini takes place a day after the South African Reserve Bank holds this meeting, and our own MPCC decided to keep rates on hold.
Okay.
mainly because they are also aware of the inflation that's actually taking place. I mean, that's quite obvious. But I think they are considering the fact that economy is weak. You know, people are struggling. Prices are going off. Everything is going up. So you don't want them then to actually make things worse by also increasing the access to their funding. I mean, the loans that they have, the home loans that they have, you're actually making it very difficult for the consumer. So he's trying to strike a balance because it's a very difficult position to be in, to try to hike interest rates in an environment where there's actually weak economic growth. So he's considering that the consumer is going to be in a very worse position. But that's not to say that if inflation spirals to continue to go in the upward direction, he may decide to hike.
Okay.
But right now he thought, let's be cautious. Let's take a cautious approach and not hike, too soon, and just make a reprieve for the consumers in the moment up until we see what the outcome will be from the geopolitical tensions in the Middle East.
All right, and lastly, we take a look at equities this afternoon. The S&P 500 is trading at $7,000 this afternoon. Take us through, what these figures mean.
Yeah, so if you look at all of them, the S&P, FTSE, and the JSE, they are all actually reaching their all-time highs, mainly because the market is just sort of desperate for good news. Anything that's coming out of the market is priced into the stock indices. Right now, they're actually saying they consider a future that's probably out of the situation where we are currently in right now. So if you look at the indices, they're actually not pricing what's happening now. They're pricing what is expected in the future. They're expecting that the peace agreement will be signed eventually. They're expecting that things are going to go back to normal. The Strait of Hormuz will open. So, and you want to be putting money somewhere ahead of time. So they are actually, right now we are seeing all the stock indices actually pumping and going higher than we usually even seen before, because the market is desperately looking for positive news.
All right, thank you for that analysis, Sifiso Ntsibande from Nedbank. We've come to the end of this segment. We go for net break and come back and wrap up the program with Sifiso.
Digital helps you make cross-border payments. Human gives you global specialists. Digital allows you to apply for a loan anytime, anywhere. Human connects you to credit experts. Digital puts you in control of your money, while Human connects you to wealth advisors. Digital allows you to freeze, unfreeze, cancel, and reorder your card. Human gives you that personal touch. Digital when you want it. Human when you need it. Get the complete private banking experience with Nedbank Private Clients.
All right, it's 2 minutes before 3 o'clock. We've come to the end of today's episode of Nedbank Business Watch. Thank you for watching. If you've just joined us, worry not, you can still watch this episode on our YouTube page, Eswatini TV.
See you again next week, same time, same place. Enjoy the rest of your day. Goodbye.
Make better money choices. Choose a bank that takes your money seriously. Business Watch was brought to you by Nedbank.